morning everyone, it's Gail with Traders Help Desk, and in this video I was asked for rules about trading volume, especially the directional volume indicator. Now volume is an advanced skill level, and one of the reasons it is it takes a lot of skill to read the volume. Now I'm going to start with an easy one, okay, and that is when price comes back to the ATR, just like it did right here, you're measuring the volume. And as you can see here, the buyers stepped in on that low and took control. That is a very easy one to read. Okay, the same thing happened here. Buyers stepped in and they took control. So that just means that it's going to go up more likely than not. Now let's go to a little bit more advanced. And if we actually mark a horizontal line here, which is the previous low, and then we mark here, which is the next low, the one thing that should stand out at you is that in price the low was higher and in the volume it is lower. Okay, so in other words, they put a lot of effort into making the price go lower, and it did not. That's actually called hidden divergence. Now you can see all the way up this uptrend that you see a lot of selling in here. Now this is what makes reading volume hard. There is a lot of selling going on in there, but price is not going down. In other words, this is a transitioning, okay, from buying to selling by the pros, okay? So you can't just go short. You have to wait to see who's going to win this battle, okay? Is it going to be the buyers or is it going to be the sellers? This is not one market maker. There are literally thousands of banks that are either buying or selling their positions. And in this case, you can see that the sellers won. Okay, that is very evident when we look at this high right here, and you can see that we had hidden divergence right at the ATR. And this usually does happen at either the ATR or the congestion dot. Okay, so in this case, you can see there was a lot of buying going on, but if you go back and actually look at the highs from here to here, there was an increase in buying that did not result in a reward. In other words, they were buying it, but price was not going up. That's your hidden divergence. Again, the hidden divergence is probably the hardest to read, whereas, just typical divergence is much easier. And you can see in this, the sellers were rewarded. You see the sellers in the cumulative and in the directional volume. Again, they tried to buy it. Again, you see a decrease in buying. Now this is usually easier to see in the directional volume. You can't really see the decrease here. You can in the directional volume, okay? And then they go back right here. And again, you see that sellers are actually controlling those bars, okay? Then it goes low, then they go back and test the ATR. When they go back and test the ATR, it seems like there's an increase in volume. But again, if we went right back to the previous high, okay, which is this blue volume bar, you can see that actually it was a decrease in volume again. What happens? They go down and they make a new low. Again, they come back to the ATR. When they come back to the ATR, it's still lower volume, okay? So in here, this is what would be called hidden divergence, okay? In other words, they put more volume into it, but they did not get higher. Again, it will probably go down off of that. Now, the mistake that most traders make when they're reading volume is they're only going to read these three. And it requires you to look at the previous highs to say, okay, are they increasing or decreasing? And in this case, if you see from the cumulative delta, it looks like they're going up. And the next question you have to ask is, okay, if there's a lot of buying going in here, are they making new highs? Because literally they are buying the lows here, but have they transitioned yet? This is where they transition to the downside. But look at all of the selling that went on behind the scenes before they actually transitioned, and more or less everybody jumped on board and said, okay, we're going to take it down. Okay, if everybody's not jumping on board and through here they're not jumping on board, they might be buying the lows, but they're not jumping on board to take this up yet. You have to say, okay, it's still going to continue down. Again, this is what makes trading it very difficult, because you really have to read their intention and the reaction and analyze it and saying, okay, are they being rewarded or not being rewarded? Or are they making a difference? Are they winning this battle? And if they're not winning the battle, then more than likely they're going to go in the opposite direction. So I hope this helps you a little bit, and I'll see you next week.